A lot of people have been asking me, what stock should I buy now? Is the market going up? Is it going down? Should we expect a pullback? When should I be buying and what? I'm going to share some stock picks from the community today. Before I do that, just a quick overview of what's going on with the market, some of the macro, and then I'm going to share several stock picks from the community and reasons why and price levels they're looking at to buy shares. So the big headline today, of course, CPI, Consumer Price Index. We got that today, 3.1% in November from 12 months earlier. That's down from 3.2% in October. So year over year, 3.1% was the expectation. Now, if you look month to month, we actually were 0.1% higher than expectations. The market's digesting that pretty well, and we're actually green on all three of the indexes, but we do have some news tomorrow. Before I get to that, here's a quick breakdown of inflation for November of 2023. You can see some food items here like juices and drinks up 18.6%, uncooked beef roast 12.5%. Insurance is actually up 19.2%. Admission to sporting events up 16.4%. Rent was up 6.9%. So what saved us here, gas was down 8.9% and airlines down 12.1%. If it weren't for gas prices, and really think airlines, part of that is going to be jet fuel costs. If it weren't for energy prices being down, this could have been a pretty bad CPI report. Now here's a chart showing you from 2021, this huge ramp up and it popped down. A little bit of pop here and it's coming back down 3.1%. So this is about what you'd expect. It's not just going to be a straight line up or down. And this was a pretty aggressive 45 degree. This is the most inflation we saw in the shortest period in a long, long time. But back in 2021, we're way down here under 2%, and now we're at 3.1%. So the Fed wants to get to 2%. And that's why the Fed's been raising interest rates. That's really to combat inflation and to get inflation down to that 2% goal. So tomorrow, FOMC meeting, and we're going to get information from the Fed about interest rates, if they're going to hike rates or not. More than likely, most people think that the Fed's is going to maintain, not raise or lower rates. The market's been bullish because it expects 4 cuts next year. And the Fed is saying that there's only 1 cut in the cards. The market's basically calling the Fed's bluff. Now, this is a big gap and a lot can happen, not only between now and the end of this year, but also in 2024. So, of course, there are going to be some macro risks. Now, this is just one possibility. Of course, the Fed is hard to predict, very unpredictable. But what could happen is you can have Powell tomorrow be a little bit hawkish, talk about how the Fed might have to raise rates more, or they might not cut at all in 2024, only one time. It's really hard to say what could happen, but the market could see some volatility. We've had a strong rip, especially over the last month. Basically, we've had this amazing run in the markets. I mean, the S&P 500, as I speak, is at 4,631. Not many analysts were telling you the S&P 500 was going to be 4,600 at the end of 2023, and the Nasdaq's approaching the composite 16,500. The QQQ, the Nasdaq 100 Invesco ETF, is sitting just around 397. You look back to November of 2021, you really need to get, I think 403.99 was the high. So we need to get something like 405 to kind of confirm the next phase of that rally. So just a fun fact here, it doesn't mean that it has to be the same every time, but I thought this was interesting. Last week, 60% more consumer staples stocks were above their 50-day moving average than their 200-day moving average. And this happened 5 other times in history. The bottom in 1962, the bottom in 1974, the bottom in 1987, the bottom in 2000, and the bottom in 2009. Potentially a signal, maybe that we have gone through this bear market. Some people will tell you that it's still a bear market rally, and this is why it can be really hard as a long-term investor. What do you believe? Now, if you're investing long-term, you have conviction, what do you own, and you're holding it for many years, you probably don't care too much about the volatility. In fact, you probably encourage some opportunity to buy your favorite stocks at lower prices. But what could happen is you could see some volatility maybe this week and maybe the last week of December before the end of the year. You could see buyers come back in. You have to keep in mind 2 things here. Number one, you're going to have profit taking, especially institutional investors taking profits to lock it on the books so they can get their annual bonuses and so on. And second, tax loss harvesting. You're going to see stocks that maybe haven't performed as well that could have some volatility and go lower again. So maybe you see that in some of those smaller cap type stocks and spec stocks and things that are actually down year to date. So if you're not familiar with tax loss harvesting, you sell one at a loss, one at a gain. Essentially, it zeroes out the tax ramifications. You get the cash from both sales. And you have to be careful with wash sale rules, but just something that could impact markets over the next couple of weeks heading to the end of the year. Now, with all that said, so what stocks should be in your radar to buy at these prices maybe today, or hopefully even lower if we get some sort of pullback? It can be hard if you miss some of your favorite stocks. So let's look at Discord. We'll look look at picks from the community of what stocks they're buying, the prices, and why. So this is directly from our private community, our Discord community, the Fired Up Wealth exclusive community. This is an elite stream chat. I asked the question, stock discussion. What stocks are on your radar? What ticker, reasons why, and price levels are you watching? So the Steel Seal is the first comment. He likes Toast. He's adding at $14 and $15 or lower. He's basically saying that the devices are everywhere he goes. Consumer UI is great. I know Eric recently discussed the stock on Chart Day. It's not profitable, so it's one that's been kind of out of fashion. The other thing too is people like to group that in with SaaS companies, that software as a service recurring revenue. And this does have hardware as a component, so it generally doesn't carry as high of a valuation. Price seems like it's found a footing after going down to $13 on downside risk. Of course, if the market stays bullish, names like that could have some nice gains. I mean, you could see some of these small caps, some of these spec stocks that haven't participated in the rally, they could go higher, of course. And that's, we're seeing that even yesterday. If you look at the Magnificent Seven, those were actually red yesterday while the NASDAQ was green. And that's going back to that profit taking I talked about earlier, but it's also a potential sign that there's more breadth in the market. That essentially those winners have already, had their run. And maybe we're going to convert some of that cash into some of these other stocks that haven't participated. The second one here is Roblox. I view them now and didn't always before. I remember with Zach here having a conversation with him about Roblox, and he's a teacher saying his kids don't really play this game. And there were a few people like me and more John Dredd Stewart in the community kind of say, here's why we like Roblox. It's massive scale, and you think of metaverse, things like that. But he is on board this train now. It's a love-hate type stock, very polarizing. They are expanding to accepted digital currency within the application, of course, doing more advertising as well. I think one of the big things with Roblox is the ability to play Roblox on consoles now. So many kids have Xboxes and PlayStations. To be able to play Roblox on those consoles is huge, especially with that cross-platform play. So now you've got computers and devices and Xboxes and PlayStations and so on, all playing on the same game on different platforms. Metaverse experience, it's kind of its own metaverse. There's millions and millions of what they call experiences, which are essentially games, and you have an avatar that your character that you can buy skins for and clothing and so on. And of course, that might not be for everybody. If you have kids, you might understand it a little bit better, but I think that this could expand more into older footprints. It already has started to do that, especially in the teens and early 20s. I'm seeing more and more content creators developing games such as Mark Robber inside the application, promoting it for educational purposes. And that's the beauty of it. Anybody can basically create experiences or games, and it's not all that hard to do. The next one here from What the Heck, he's saying that Shift4 Payments, so ticker is 4, one that I've talked about once or twice on the channel. He's saying that it's a competitor in Toast. I mean, for the point of sale, yes, but not everywhere. So essentially, you think of 4, they can certainly compete in certain areas, but I think Toast has a lot more capabilities if you're thinking restaurant specifically, and you probably understand all that, and just make sure the audience does. The 4 PE 17 range, price of sales around 2, free cash flow, SEC adjusted around 5%, $900 million in cash roughly, but they also do have about $1 billion in debt. Last quarter grew revenue in the low 20% range. Talking about winning a lot of new clients, specifically in the sports industry for professional teams at stadiums. In fact, I think at the Viking Stadium, went to a Viking Saints game at US Bank in Minneapolis. I'm pretty sure it was for there. One thing though I thought was strange was that management stated they are looking to be taken private. Well, honestly, that could be just because it's hard sometimes being a publicly traded company. If you're passionate about the business, and I don't know for sure, but one thing I can say, once you go from private to public, it's a completely different game. And a lot of times people don't know what they're getting signed up for. There could be strategic reasons for it. And maybe it's vision of the company. Maybe there's other reasons. Hard to say. A lot more compliance and paperwork and just hassle. And so I don't really know that company intimately enough to tell you why they might want to take it private, but there could be reasons that might make sense. The next one here is CP. I believe this is Canadian Pacific Railroads. Stock price flat this year, so still getting some buys in the $70 to $75. I mean, the thing about a stock like that is they generally do kind of stay flat. They're, DGI or income type stocks. So, I mean, there's nothing wrong with companies like that, but they're not growth stocks, right? You're kind of buying them for the dividend primarily. It's the only North American railroad that goes from Canada to Mexico. And that's awesome. And certainly can mean that the company can continue to do well, but they can only grow so much too. So wealth accumulation versus wealth preservation. And it's okay to have a blend of some stocks. We talk about having some dividend stocks in a portfolio portfolio. So definitely one to check out for the right audience. And it's good to have a mixture. And that's what's great about our community. It's not just all hyper growth or spec. It's everything from ETFs, dividend stocks. I mean, we're talking DGI, income type stocks. We're talking everything under the planet, under the moon, I guess, is covered in our Discord community. And if you're interested in joining, you can check it out. Go to patreon.com/firedupwealth. Deer is a position. This is pit bulls need love. Deer, ticker is DE. Position meaning to add and waiting for the levels 350 and less. DCA is what I've been saying. It kind of teases with that 355 level. I want it to be one of my compounders that isn't tech, which is what all of mine are currently. And then that's interesting because it's not tech, but the reason I actually bought it is because they're getting more into tech when you think of autonomous tractors, and they hired their first CTO, chief technology officer, a couple of years ago. But at the end of the day, this is an industrials company. It's been around since the 1800s. And again, this is a dividend type stock, and it's not growth. It's more of a DGIF, so it'll give you some growth. But companies of this size, and especially industrials, are cyclical. So when you build a portfolio, you might have different buckets, and you might want to have some dividends, maybe some diversification in industrials. John Deere's a good play for that. But think about what it is. It might give you, 10, 12%, maybe 15% annualized returns, maybe even less, but somewhere in that range, my expectation. And I think it's always good to have expectations. It's not a growth stock. And I think it's important to understand what you're buying, what kind of stock, why you're buying it. You'd be buying it for diversification and really just to have some dividends that kind of compound, but they're not going to be your home run hitters. They're going to help you get on base, get those singles and doubles, we call them. So Dave here is looking to build out snow and Amazon positions. As I look at big data, these just scream to me that they will be big players in the space. I definitely agree. I've been long on these for a while. Everywhere I run into Amazon, AWS, and data. I'm talking to myself into buying Amazon in my retirement account, but struggling as I have told myself to stick to ETFs. It's okay to have a couple stocks, but generally I like to have ETFs. And at the end of the day, every person should do what they think is best, with their money. Blue Phoenix, Snowflake, Datadog, and Cloudflare, ticker NET. I just consider these core growth. And since liquidating my taxable portfolio over the summer, I want to buy some back in my 401k. I bought some Indie and Trade Desk there, but not those. Unfortunately, those have ripped pretty hard from those low levels, and so it can be tough to try to time the market when you do that. This next one is GLBE, so e-commerce expansion, cross-border payments, and bullish on that, working with companies like Shopify. So that's Global E, ticker GLBE. Flossy Gnome is looking at John Deere and ACLS. John Deere is in his blueprint as a DGIF stock. That's perfect. That's what it should be in my opinion. Outside of the tech sector, again, the reason I bought it is for the technology, but it's an industrial stock, but the reason it became appealing to me is I think about the tech and farmers replacing their equipment over time. Now with interest rates as high as they are, that makes it harder. And you got to remember industrials are cyclical as well. But if I look at over the next 5 and 10 years, the amount of equipment that's going to have to be replaced and updated, not only with new combines, tractors, and machinery, like with higher tech from electric to autonomous and so on, even drones they do, but also they have replacement parts or ways to essentially take older machinery and update that as well. So quite a bit of opportunity, but I don't want to overhype it. At the end of the day, again, I said it's an industrial stock and it's not going to give you, home run hits or anything like that. Virtual unknown. I have large positions in some of the AI favorites, NVIDIA, AMD, Marvell Technologies, and Microsoft, but I'd like to add a couple. CDNS, around $240, SMCI around $200. Have starter positions in MPWR and ServiceNow, ticker NOW, in the low 300s and want to DCA, but not at current prices. I have a small position in 2 spec stocks. This first one is INOD. At first I thought you were saying Indie, but it's INOD, another AI stock. I'm not familiar with that one. That's the beauty of the community. It's not herd mentality. We cover all kinds of different stocks. He said he'd like to DCA around $6, and then GENI, another one I don't know very well. I've heard of it, I guess. Online betting below $5. Says he has solid conviction in both. One spec stock I'd like to start a position on, ticker ONON. Bought a pair of those running shoes, absolutely love them. All right, so that's that. Red Lime, Snowflake, looking to add more in my portfolio. Looks like big data is the future. Of course it is. And Snowflake's well positioned to capture big market share. I'm holding very tight to add some more snow. Matt Payne is looking to add more ASML. He actually wants 600, prefers under 550 with DCA. And of course, these prices might not happen. Just sharing what they're looking at. Pick and shovel play for the new oil. Semiconductors is the new oil, right? Strong business and solid growth, dividend player, solid management, money being pumped in R&D. So that's ASML. And then we've got Caesar. He goes by FD Rocho and Discord. This is a lifetime VIP member, one of, I think, 3 or 4 lifetime VIP members for Fired Up Wealth. The stocks that are on my radar and bullish are the Magnificent Seven. Would love to add more. So already owns all 7, wants to add more. If you want to know what those are and some thoughts on it, I've got a video you can watch after this one. I'll put a card up here and you can go check that out. A video that covers the Magnificent Seven. Now, Caesar's also from Peru and is big on Mercado Libre. So that's another one to consider. I also own Mercado Libre. I think that one will continue to do well. You know, the problem with a lot of these stocks, though, is they've ripped pretty hard from the lows. And so, you know, a lot of these stocks we were buying at lower prices. But several of the ones I just covered are stocks that I don't own. When you think of, you know, 4, and there's half of the stocks I covered today I probably don't own in my portfolio. So just some food for thought here as you're looking for opportunities to buy stocks. So hopefully this is helpful, guys. Definitely subscribe if you're new here and click that bell for notifications. Check us out. You can join our Discord community. There's a free trial, 7-day free trial. Go to patreon.com/firedupwealth. If this video is helpful, drop me a like, drop me a comment. I appreciate your time and attention. Have a great rest of your day. Take care.